Imagine earning an extra $500 per month of truly passive income that will continue to grow and compound automatically over time. In today's video, I'm actually going to be going over exactly how much money you need to have invested in the stock market to be generating that $500 of truly passive income through dividends. If you're new to the channel, my name is Josh and I recently started a dividend investing portfolio with a goal of growing it to $100,000 over the next few years and for it to ultimately be generating me an extra $500 per month of dividend income. Like any goal in life, it is important to have a plan and a strategy in place, and I think that it's even more important when it comes to personal finance and where you're putting your hard-earned money when it comes to investing it. And that is why in this video, I'm going to be going over how much money I plan on investing into this dividend portfolio on a monthly basis, the types of stocks and the dividend yields that I am aiming for, the portfolio trajectory over time and where I expect it to be in a few years' time, the power of compounded growth and where compounded growth is expected to get this portfolio, and how many likes a YouTube video needs in order for it to get recommended by the YouTube algorithm. Just kidding on that last one, but in all seriousness, please smash that like button for good measure. And for anybody looking to start an investment account, M1 Finance is actually running an awesome deal. M1 Finance is who I invest with. If you sign up with them using the link down in the description, I'll put it right down there in the description, you're actually gonna get $30 for free when you deposit $100 into an account with them. That's a 30% ROI right off the bat without even having to invest in stocks. I love M1 Finance. It's what I'm using to build out my dividend investing portfolio. If you wanna check out the review I did on them right here, and I think that they're an awesome app, and take advantage of this deal because you don't know how much longer it's gonna be around. So take advantage and get your $30 free by signing up using the link down in the description right now. And with that, let's hop right into the content. So I chose $500 per month as my goal because I think that this is a really good goal to try to achieve within the next few years of me building this account, of reaching it with this compounded interest and getting those dividends to where I can actually make that $500 per month, and ultimately that's going to be $6,000 per year. Now, like I said, the best part about dividends is actually the compounded growth that they start contributing to your portfolio. It's a snowball effect, and this is the reason why I love dividend investing so much. It's so powerful, and I think that once you hit that $500 per month mark, this is where you're gonna really start to see that growth and trajectory start to take off within an account. Now, starting out, this snowball effect is gonna be relatively small. I'll be completely honest. I expect maybe the first 2 years of this account being open, it's gonna be a lot of my own money going into this, a lot of my hard-earned money that I earned through my 9-to-5 job right now. And that's gonna be going into this dividend account. To be honest, I'm probably not gonna start to see that compounding effect for a few years, but that's okay. I am completely okay with that. And I will say that my goal for getting, this channel monetized, and once I get this channel monetized, I'm actually going to be investing all of my AdSense revenue right into this dividend account. So if you want to subscribe to the channel, like this video, get this out to more people, help me get monetized, that's going to be great because I can grow this dividend investing account even faster once I start getting monetized and just putting all of that money directly into this account as well. But right now, my plan is actually going to be to invest $2,000 per month of my own money into this account. So that comes out to around $24,000 per year that I'm going to be aiming to put in every single year. I'm very fortunate enough to be living, sustaining my own lifestyle and also be able to put $2,000 into this dividend investing account. Don't feel like if you're just starting out and you're a dividend investor, don't be discouraged if you don't have that much money to put in. Even if you're putting in $50 a month, even if you have that is a great start because over the long run, over 20-30 years, that is going to compound and you're going to see exponential growth investing in these large blue chip stocks. Now, the cool thing is I'm going to be documenting everything on this YouTube channel for you guys, the viewers, any of my subscribers, and the community as a whole. You guys are going to see exactly what stocks I'm going to be putting in here because every time I put a stock into my portfolio, I do a really good in-depth review on why I'm putting that stock into my portfolio and the financials behind the stock. So that way you guys can follow along with the journey. Now, with that being said, my ultimate average dividend yield that I am shooting for is to keep it around that 4 to 5% dividend yield. Now, starting out, my goal is to diversify as much as possible across as many industries as possible and across as many companies as possible. And that's initially going to kind of reduce the risk that I have exposed in terms of, the industries and sectors, but also in terms of companies and stocks that I'm going to be investing in. Now, if you saw my first video that I made on this, topic, or the top 5 stocks that I invested in May, you can already see that a lot of those companies are different. I tried to keep them all different at first, and this is going to gradually get harder to do as I invest in more and more companies. But like I said, at first, my goal is to diversify across a broad spectrum of companies. Now, I do plan on investing in maybe a riskier stock here and there once I get this solid foundation laid out. Keep in mind that maybe for the next few months, I'll be investing in a lot of these blue chip, large dividend aristocrats, a lot of these dividend kings that I think will be paying out a dividend that will be consistent for the foreseeable future. So to see how this portfolio is going to perform in the next few years, I actually decided to use this website called MarketBeat.com to project out long-term what I think that this portfolio can realistically become, within the next 10, 15, 20 years. And I'm going to break that down right here, right now for you guys to show you exactly what is possible with this dividend investing strategy. Coming in here, I want to point out that this is a really good website if you want to just get a feel for what a portfolio can do. It is not the end all be all. It is just a projection based on the numbers that you put in here, but it gives you a good feeling for how a portfolio can perform over the long term, and it gives you, a good strategy and a plan moving forward for what you should be doing to reach a specific goal. So starting out here, I want to actually start here with $1,000 because that is exactly what I started this dividend portfolio with. So starting principal, $1,000. This account will be taxable, yes. Distribution frequency, I'm going to go with quarterly. Now, the key here is a lot of dividend stocks will pay out on a monthly or quarterly basis, but I would say that a majority of dividend paying stocks pay out on a quarterly basis because that is how their businesses are run and that is how their financials are run. So you will have the, monthly dividend stock here and there. I will be doing a future video on top monthly dividend stocks that will pay your bills. But for now, I'm going to put in quarterly because I would say a majority of the stocks that will be in this portfolio will be quarterly paying stocks. DRIP. So DRIP is dividend reinvestment program or plan. So basically, this means that automatically when a dividend is paid out to an investor for a stock that they hold, that dividend will be automatically reinvested back into purchasing more shares of that stock. Now, that is something that is crucial to getting that compounded growth that I mentioned earlier and seeing that snowball start to grow, because as you get those dividends paid out, you're going to reinvest those back into growing your account. And that is basically what the DRIP or dividend reinvestment plan means. So I'm going to put yes there, or leave that as yes, because that is exactly what I'll be doing here. Now, annual contributions, I said I was going to shoot for minimum of 24,000, but let's just say 30,000 because I think that's a doable number. That's a little bit above my $2,000 per month goal, but I think it's realistic. Dividend tax rate, I'm going to go with the maximum here that is taxable for these because I am in the higher tax bracket. So I'm going to put 20%. Now, there are, different laws and different rules in different states, but I will say that my tax rate for this will be 20%. Tax exempt dividend income allowed per year, I'm just going to leave that at 0. Annual dividend yield, so like I mentioned, is going to be between 4 and 5%. So I'm going to go right in the middle with 4.5%. So now we're going to go over the expected annual dividend increase per year. I'm going to put this at around 5%, and that is because the average expected annual dividend increase that has been averaged out over the past few decades has actually come out to about 5.4%, which has beaten inflation. And that's a really good sign, but I'm going to keep it conservative here and go with 5% as an expected annual dividend increase, which means that a company who's paying out dividends, say 50 cents a year, they're going to increase that dividend by 5% on average every single year to make investors happy and to keep up with inflation, because eventually inflation might overtake that, and that's a whole nother conversation for another time. But set that for 5%. Now, expected annual share price appreciation. Now, this is something that you'll see a lot of S&P 500, quotes of saying, over the past 100 years, the average return of the S&P 500 or the stock market was between 10 and 11% if you average it out. Now, I'm going to go with an expected annual share appreciation conservatively with 6%. And that is because dividend stocks typically do not appreciate as much as other growth stocks, right? So that 10 to 11% takes into consideration the dividend, and it takes into consideration the growth and the appreciation. 6% is a good number for dividend stocks. Now, years invested, I'm going to go with 20 because it's going to calculate the whole table, and we'll see every year, but let's calculate this. Okay, so now I'm actually going to show you the calculated amount. And as you can see down here, it's actually pretty crazy after 20 years. And this is what the magic of dividend investing is. So after 20 years, the calculated account balance will be around $2,137,959. So that's pretty crazy over 20 years. That's that compounded projection. That's that exponential growth once you start going. And I'll break down all the years and where it's expected to grow. So total dividend payments over 20 years, $1,121,000. This is amazing, right? So that is more than half of the entire account balance after 20 years was those dividends being reinvested back in. That's over $1 million in 20 years of just dividend payments. And a lot of those are going to be coming towards the end as this account grows. It's unbelievable, the magic of dividend investing. So let's just go here. So as I mentioned, my goal is to get this to $100,000 and to be generating $500 per month. So let's break down when I can expect that to happen. So we started with $1,000 this year in 2021, and I'm going to be putting in $2,000, between $2,000 and $3,000 per month when I can afford it, into this account. So it's going to be between $24,000 and $36,000 per year. So the ending principal after this year, this full year, will be around $31,000, and that's a lot of my capital, as I mentioned. The snowball doesn't start until later on, but as you can see, the annual dividend yield after this year will be around $1,500, okay? Now, that is not $500 per month. $1,500 is a little over $100 per month, right? So $1,200 annual dividend would be exactly $100 per month. So if you think about it, in order to achieve that $500 per month, we need $6,000 in annual dividend income. So let's move on. After the next full year, there will be $63,000. But if you look at the balance, there will be $99,000 in the account. Okay, so that's after the entire second year. And the dividends will be around $3,000. So we're about halfway there after the second full year. And I'm counting them as like the start of the third year is the full second year. So here we'll see the start of the fourth year, and the ending balance will be $138,000, and we're getting close here. So it's going to be between year 3 and 4, or on here it says 4 and 5. But if you take away that initial starting year of $1,000, and take into consideration the full year, it's going to be around between 4 and 5 on this spreadsheet, or between 3 and 5 or 3 and 4. So that's going to be when I'm going to cross over that $6,000 per year annual dividend, which, like I said, my goal is to get this in the next few years. And after 3.5 years, 4 years, if I'm there, that's going to be great because then we can just let it kind of sit. So let's just say once I hit $100,000 and let's just say I hit this 138,000 and 5,200. If I wanted to leave it there and just kind of let it grow on its own, I could do that, and then the dividends will just get reinvested and it'll just grow the account on its own. But let's just say for the next 20 years I continue to do this. By year 10, I will be making $29,000 in dividend income. That's almost a full-time income for some people. You know, for some people that's even more than a full-time income after 10 years. This is that dividend growth. So just keep that in mind when you're looking into dividend investing, and this is the power of it. Now let's just jump down to 20 years here. The annual dividend here is $218,000 and $458. That is just unbelievable. Being able to make 6 figures in dividend income, and that's just from the account growth. If I did this for the next 20 years, I'll be 46 and being able to make $218,000 in dividend income. Now, one last thing that I actually want to go over in this is, let's just say I want to do this for 5 years where I'm contributing my own capital, and then I want the account to just run on autopilot on its own, okay? So after 5 years, there will be $181,000 into this account. So let's just go 182, round up. So let's put that into the starting principal. $182,000. Annual contribution is going to go to 0. I'm not contributing anything anymore. Okay? All the rest of the numbers are going to be the same because the portfolio itself isn't changing. It's just where the portfolio is starting at now, as the year 5 is the starting balance, right? And the annual contribution is going to be 0 on my part. I'm just going to let it run on autopilot. After 20 years of that, so let's just say for the next 5 years, I let it run, or I'm contributing, and then I let it run for the next 20 years, it's still going to grow from $182,000 to $1,499,000 with an annual dividend income of $155,000. That's with me just forgetting about the account, letting it run on autopilot, you know, saying all the companies still pay out their dividends, they're doing all their normal dividend increases. This is where we're going to come out to. Cumulative dividends, $937,000. Now, I can fork up $30,000 of my own money over the next 5 years in order to reap this benefit in 25 years. Okay, so we're going to add another 20 years on top of that 5 to get to this. I can live off of $80,000 a year, let alone $155,000 a year. And this means I would be able to retire when I'm 51. So that's just a really cool example of compounding interest. And this is actually something that I see other YouTubers who are in dividend investing, like Andre Jick. He actually stopped, from what I know in his videos, contributing to his dividend portfolio and is now investing in other investments. But that portfolio is continuing to compound, continuing to grow on its own. He's just kind of letting it sit there and do its own thing and grow. That's the power of dividend investing. So now, if you want to watch the other videos in this dividend investing series that I am putting together, I put them on a playlist for you guys. You can click on them right up here. And if you want to subscribe to the channel so that way you don't miss any future episodes on this dividend investing series, click this button right here in the middle. And until next time, continue to build that financial fitness, and peace out, guys.